In this video, I'm going to show you how you can generate returns, whether the market's going up, down, or sideways, through combining yield farming and trading. Before I get into this video, I do have to say that this should not be taken as financial advice. This video is for your education purposes only. As we always say, do your own research. So in this video, I'm going to explain what yield farming is, what trading is, and how you can maximize your returns through combining these two. I'm going to show you some yield farming strategies for bull and bear markets, because yield farming during consolidation is a given. And I'm going to show you how to know when you should be entering or exiting a yield farm and entering or exiting a trade. So without further ado, let's get into the content I asked. If you get value from this video, please consider subscribing, not just to Crypto Noah, but also to the Know It Owl's YouTube channel as well. That is a rug. That is not a video edit right there. So let's get into it. So let's talk about yield farming and trading and what these things actually are. So trading is pretty obvious. It's just entering into a directional position via long or short on an asset. So longing it is buying it with the hopes of the price going up and selling it for a profit. And shorting it is borrowing it, selling it with the hopes of buying it back cheaper in order to make a profit. Yield farming, on the other hand, is actually taking your assets and loaning them out on different decentralized platforms so that you can facilitate either borrowing and lending, insurance premiums, and my favorite and most profitable way of yield farming, facilitate trades on decentralized exchanges such as Uniswap and TraderJoe. So what you're doing is, like, let's say you want to make money in Ethereum and USDC. You're taking your Ethereum and your USDC, you go and deposit on Uniswap v3 or v2, but v3 allows you to do what's called concentrated liquidity. And I made an in-depth video on this, so feel free to give that a watch. It allows you to pick the price point that you think that these pairs are going to trade between, and whenever it stays between that price point, you're making passive income depending on how wide or narrow your range is. The more narrow it is, the higher your passive income, but the higher your risk, because when it goes out, you experience what's called impermanent loss. And the more narrow your range, the less your passive income, but the more likely it is to stay in range and minimize impermanent loss. So like, for example, ETH has been trading between 1,000 and 2,000 for a while. You could have been providing liquidity within that range on different chains and just making passive income to just sit in the position. And you can use yield farming as either a take profit strategy, as we're going to show here, or as an opportunity to buy the dip. And we're also going to cover that here. So let's talk about why I'm making this video right now and why it's going to be timeless. Okay, I'm making this video right now because we've been in a consolidating market for over a year, and that is the perfect time to maximize yield farming. Like I said, we're going to show you bull and bear market yield farming strategies, but the best time is through a consolidating choppy market because the price is staying within that range for a while. And this video is timeless because there will always be opportunities to pair yield farming and trading, no matter if we're in a bull or bear market. The market can only be doing three things, no matter what's happening. It can either be in a bull market, which is creating higher highs and higher lows. It can either be in a bear market, which is creating lower highs and lower lows. Or it can be in a crab market, where it's not creating either of those, it's just going sideways. These are the only three things that the market can be doing no matter what. Let's look at it on a chart. So we're here on ETH USDC, and like I said, three things. So if we start from right here, we saw us in a choppy market. It's not creating higher highs or higher lows or lower highs or lower lows. It's just going sideways. Same here. Right here, we were in a bull market. It's creating higher highs and higher lows. So you have a low here and a low here. You have a high here and a high here. Then we entered a bear market from here to here, where it was creating lower highs and lower lows. You got a high here, and then a lower high. You got a low here, and then a lower low. High here, another high here, low here, another low here. Same thing. Bull market, bear market. And lately we've just been consolidating. And like I was saying, these are all opportune times to yield farm. Had you provided liquidity from the price of $328 and $368 for ETH from August of 2018 all the way till September of 2021, you wouldn't have had any impermanent losses. It stayed within the same range for a long time, right? And then we'll talk about the confirmations we look for in order for us to get confirmation that we want to enter into a long position. So as you can see here, we were in a consolidated market. The market wasn't creating higher highs or higher lows or lower highs or lower lows. It was just straight going sideways. Then we entered into a bull market where we created higher highs and higher lows. Got a high here, a high here, a high here. Each one is higher than the one previously. Then you have a low here, a low here, and a low here. That's a bull market. Now we had a bear market where we had a high here, and then another high that was lower, and another high that was lower, and then a low here, and a lower low, and a lower low. And the same thing when you move over here. The market can only be doing those three things at any point in time. So now the question you may be asking yourself is, how do I know when to enter into a yield farm or when to enter into a long or a short position? And it's a great question. And the answer is, it depends on your strategy. But as a general rule, like we said, consolidation is the best time to yield farm because price stays within a given range and you don't experience what's called impermanent loss. But if you provided liquidity within a range and you're expecting bullish or bearish momentum, that can be a good time to exit your farm and enter into a long position when you're expecting bullish momentum, and in a short position when you're expecting bearish momentum. And obviously, shorting is way riskier than longing because when you long and something goes to zero, you can only lose everything, or you can only have your assets go to zero. But if you're into a short and it goes up, your losses can be infinite and you can actually end up owing. So let's cover the first thing, which is bearish momentum. How do you know when to expect bearish momentum, and how do you go about exiting the farm? Let's talk about that. So this is a two-part question. There's two things you want to be looking at. The first thing is, no matter what asset you're providing liquidity for, you always want to keep up with updates from that company or project. If something bad happens, that can be a time to exit your yield farm and exit the trade or enter into a short. And on the upside, as you're keeping up with fundamentals, if some bullish update happens, it can be an opportunity for a narrative trading opportunity. So if you want to maximize your long end potential, you exit your farm and you go long so you can get maximum price appreciation. So let's look at the chart and look at how to identify when bearish momentum could be coming. And I say could because you're always looking at probabilities. Nothing is for sure. No one knows what's for sure going to happen. You can only increase the probabilities. I'm going to show you how to do that here. So we're going to keep using ETH/USDC as our example here. And I always like to start looking at my technical analysis from a macro view. You know, they say when in doubt, zoom out. So this is a monthly chart. Each candle represents a month. So what could be a good indicator of bearish momentum? Now, what you'll see is that it takes a while for things to go up, but the drops are always a lot faster. And that's because people, when you're looking at this mark, when you're looking at a chart, you're looking at people's fear and greed quantified through candlesticks. And the desire to gain something is not as strong as fear of losing something, right? And as you can see, it took a while for this buildup to happen, and then boom, you just saw it drop. So first thing to look at is like, okay, on the monthly, if I get a big red candle after a couple green candles, that can be a cause for concern. Okay, so that's the first thing. Now you want to go down, and what you want to see is you want to see a break and retest of that previous level. So the market likes to move between ceilings and floors, and I made a video on this right here if you want to check out the whole video. I'm not going to go super into detail here, but I do want to give you guys something. So you see a break and retest. So this is right here, this line could be a strong support zone, this zone from here to here. And the market treated this line as resistance here, resistance, and then it broke it and it tested it as support for a few weeks, okay? So what can be a good sign of bearish momentum is when it breaks and retests it to the upside. So you saw a break and then you saw it retest. And then when you see that nice big red candle, it's like, oh man, you might want to get out, okay? And it's the same thing on the upside. We're going to go through that a little later in the video. But what I use for extra confirmation is I'll like draw trend lines here as well. And then if I see a retest of the resistance line as well as my 200-day moving average and my 62-day, then it's like, okay, it's even more confirmation because as you can see, whenever the market is on top of the 200-day, it's usually bullish. And when it's on the bottom of it, it's usually bearish. So it broke my 200-day and my trend line, and it retested it as resistance and printed a nice big red candle. I actually got into my short around this level, and I'm going to show you guys how I did it. But before I do that, let's talk about a yield farming strategy for if you're expecting the market to dip, okay? So let's say you get here and you're like, oh, we see a break and retest. Instead of entering into a short, let's say you want to make some passive income. You take part of your portfolio. You can provide liquidity within the range of 3,531. And let's say you are expecting ETH to go down to 1,000. So you're providing liquidity from, let's just say 3,500 down to 1,000. Okay. And you can use what's called Aperture Finance, which is a Uni V3 tool that can help you exit your pools on certain, whether if it's a time-based thing that's hit or a certain price point that's hit. So that way, if you're not by your computer, you can still, exit it. And I made a video on how to use Aperture Finance here, and they just released on like multiple chains. So I definitely recommend giving that a watch. So you could have provided liquidity from 3,500 all the way down to 1,000, and you could have generated a good amount of fees just because of the sheer volume of selling, right? Look at that volume, these big red bars down here. So you could have said, hey, from 3,500, get me out at 1,000. And now, not only did you generate fees, but you exited down here. And once you go out of range to the downside, you're going to be in 100% ETH. So you basically got paid to sit in a limit order and buy a dip. So instead of using a limit order, which is saying, hey, here's my USDC. When price gets down to 1,000, take my USDC and buy this much ETH for me. You can provide liquidity until you get to that range, and when it hits that range, you're automatically taken out with your ETH and your USDC. Okay, now let's talk about the next thing that would make you want to exit your firm, which is when you're expecting bullish momentum. Let's go over how you can look at your chart and try to predict when some bullish momentum is going to set in. So like I said, I like to start from a zoomed out position. Like I said, we're looking for a break and a retest. When we were talking about the resistance, break, retest of my resistance as well as my 200-day EMA, it's the same thing on the upside. You look for a break and a retest, and this is like the perfect setup right here. You saw it break, you saw it come down and retest the resistance, previous resistance as support, and it retested my 200-day EMA. Had you got in after that candle printed, you could have rolled ETH for a 234% return. And obviously you're never going to time the top, but you want to have price taking targets already. And that is totally dependent on your risk tolerance and your portfolio and lifestyle. You saw the same thing here. You saw a break and you saw a retest of the previous resistance, now support, and my 200-day, okay? And, that's on the weekly. If you zoom out, you can see it a lot better, right? You saw this break, you saw this retest, and you saw this nice big green candle right here. Had you got in right here, you could have rolled ETH up to a 615% return. Obviously, you're not going to time the top. We just talked about that. So let's talk about yield farming when you're expecting bullish momentum. So instead of using it as a buy the dip opportunity, you're using it as a take profit strategy. So let's say right here, okay, you see this this break and retest, you see this green candle, and you're like, let's say you're expecting ETH to go from 1,000 to 3,500, okay? Same line here, right? You see this break, you see this retest, you see this nice big green candle print. Instead of doing a sell limit order that's saying, hey, here's my ETH, sell when it gets to 3,500, you can provide liquidity from 1,000 to 3,500, and now you're getting paid to sit in a sell limit order. So as price is going up, up and down, whenever people are trading back and forth, which they are because you see all this volume, you're making passive income. And using Aperture Finance, you can say, as soon as it hits 3,500, get me out. You're going to be providing liquidity in 100% ETH, right? And as it goes up, it's pretty much a limit order for the losing asset. So you're going to be going from ETH to USDC, and as soon as it hits $3,500, you're going to be taken out of the position if you use Aperture, and you're going to be in 100% USDC, plus you'll have your ETH and USDC fees, okay? So I talked about how you can enter into a leverage long and a short. Talked about how short is more risky. However, through longing and shorting in a decentralized way, you actually decrease the risk, and this is the cool part, you can actually yield farm at the same time and generate passive income to borrow assets, okay? Let me show you how to do that on Radiant Capital. And I've made tons of videos on Radiant Capital on my channel. Feel free to watch those. Okay, so let's talk about if you want to short first. So in order to short, when you're shorting on Radiant, and this is just like Aave, you supply assets, you get a yield, and you can borrow based on the assets you supply, which becomes your collateral, okay? If I want to short ETH, I am going to deposit USDC right? So now when I deposit that USDC, I'm getting 2%, 2.28% currently in USDC and 3.24% in Radiant for a 5.4% APR, okay? So I'm getting 5%, 5.4% APR. And if I want to short ETH, I want to borrow ETH and sell it for USDC. And I want to take that USDC and redeposit it and do the same thing over. And it's called looping. And it gives you the looping APRs here. The reason why you want to use USDC as your collateral is because if the value of your collateral drops, you can get liquidated and lose everything you have except for the borrowed assets you have in your wallet. By using USDC as collateral and borrowing and selling ETH, you're allowing yourself to, like, let's say if ETH drops and you buy it back to pay off your loan, well, you got to buy back ETH cheaper and you get to keep the difference. So just to summarize, the asset you're borrowing is going to drop, your collateral is going to stay stable, and then you can withdraw some of your collateral, buy ETH back, and pay off the loan and keep the difference. And not to mention, if you want to borrow ETH and sell it, you have to pay 10% to borrow ETH in ETH, but you're getting paid 9.2%, right? So that is, you're actually paying 1% to borrow, but you're actually making 5.4% to deposit. So you're actually getting paid 4% to sit in your shorting position versus just paying fees, okay? And these fluctuate. There's been times where I've made way more than just 4% doing it. And when you loop, that APY gets magnified depending on how many times you do it. Now let's talk about if you want to long something instead of shorting it. So like, let's say you want to bet on the price of ETH going up. So what you would do is you would supply Ethereum as collateral instead of USDC. And then you would borrow USDC, buy Ethereum, deposit that Ethereum as collateral again, borrow more USDC, take it, buy more Ethereum, and you just loop that. Okay, so now let's talk about how much you make in passive income. You're getting paid 2.5% plus 1.3, which is 3.8%, right? And you're borrowing USDC. So you're getting charged right now 14%, but you're getting paid 10%. And to be honest, I'm bullish on Radiant. They're an omni-chain borrowing and lending market, and they share the protocol revenue with you if you do certain things, and I've made videos on that. So you're getting paid 10% to borrow, but you are being charged 4% in USDC to borrow. So that means you're getting charged 4% if you do the math on this. Well, really, this is basically 11%. So you're getting charged 3% to borrow, but remember, you're getting paid 3.8%. So you're making like point something percent to do that. While you're sitting in your long position, you're getting paid. And you're better able to manage your risk because, you know, if the market starts going against you on your short, you can deposit more USDC. And if it starts going against you on your long and going down, you can deposit more ETH. It's harder to do that in a regular short position or a regular long position via an exchange. So to put a bow on this video, let's talk about why it's beneficial again to combine yield farming and trading. When you're yield farming, my strategy is mainly to accumulate blue chip assets that I want to sell at a higher price at a later date. Okay? So as I'm yield farming, for example, you guys have heard me talk about Radix for a long time. I've been in this farm for almost 2 years straight, 565 days. It hasn't went out of range. It's been making 45% APR pretty much the whole time. And factor in the price of both assets. Now I've sold for profit, so I've actually made more than this. I've made $11,000 just for providing liquidity, not doing anything. So my strategy for that pool and my other pools is I want to accumulate as much Radix and Ethereum as I can. I take my profits, I send them to another wallet, and then I have price targets for what I want those assets to hit in order for me to sell. And then I sell those for a profit. And now I have more profits, and now I'm taking those profits and I'm entering them into another farm, okay? And I'm doing the same thing, generating fees, so I can then take those fees, send them to another wallet. Sometimes I'll keep the fees in USDC, and I'm looking at some other project that I want to buy. I'm waiting for it to drop to a certain price range. So you're also accumulating stables to buy assets at favorable prices, or you can use them to accumulate blue chip assets that you're bullish on as you wait for them to sell. And you just rinse and repeat, and you just keep recycling. And this allows you to always be active in the markets, and not just for the sake of being active, actually maximizing your profit potential. Okay? Because when the market's going up, better to be in the long. When it's going down, better to be in a short, or do nothing if it's too risky. But like I showed you, you can do that in a decentralized way. And when the market's consolidating like it has been for the past year, you can just be printing money, right? And the cool thing about yield farming is that major banks aren't allowed to legally provide liquidity within DeFi. Like whenever you go and buy your stocks on Robinhood or whatever brokerage you use, it's not the brokerage that's holding the inventory, it's market makers, Goldman Sachs, Morgan Stanley, etc. So when you go buy Tesla, it's these firms that say, hey, here's 500 million in Tesla, here's 500 million in cash. Only use my liquidity for when the price is between X and Y, and they profit from what's called the bid to ask spread, aka the trading fees that you and I pay. It's the market makers that are making those fees. And for the first time in history, everyday people like you and I are able to generate passive income through market making, right? This is the best way to generate passive income in the history of the world. And our Know It All Academy shows you exactly how to do just that. Our course will be going on sale very, very shortly. Visit knowitall.xyz. We show you how to conduct the technical analysis that I did in this video so you can master your entries and your exits. We show you how to come up with your own strategy. We show you the mindset you need to have to be a successful investor and yield farmer. We show you how to operate securely so you never hacked, like how you see all over the news. And we have the best / simplest yield farming course. We start off with just yield farming basics, how to calculate impermanent loss, all of that stuff. And then we go into advanced strategies, some of which that I showed you today. And then we have coaches that hop on calls with you to make sure that your plan is going how you want it. I will say this is not something to do to expect to get rich overnight. And we're looking for self-motivated people who want more out of life, who are passionate about crypto, who want to generate passive income with a group of like-minded people. If that's you, we love to meet you, and we love to help you achieve your goals for yourself and your family. So with that, I thank you guys so much for tuning in. I ask that you subscribe. If you got value from this video, subscribe to our Know It All's YouTube channel as well. And with that, I love every single one of you, and I'll see you in the next video. Take care.